Hi, hello everyone. Today we are talking about a crisis in India, the water crisis in India, the actual reality in India, and the corresponding opportunity it brings you in terms of the companies registered in the Indian stock market. So, what we'll be doing is we'll be understanding the reality on ground in terms of water crisis in India, and then we will be touching upon the companies that are present in this sector, and then we will be providing you with some of the recommendations in terms of your risk appetite and your investment horizon. So if you're interested, stay tuned till the end. 600 million Indians face extreme stress because of water crisis. So that is approximately 50% of India. Let's deep dive. Let's go into the state level stats. So if you see on the map, 54% of India faces high to extreme stress over water. So if you see that states like Gujarat, Rajasthan, Haryana, Delhi, Punjab, these are the states with maximum stress, the highest stress. So we will correlate this location level insight with the companies also. But what I'm trying to say is that we are facing a severe water crisis and it is not being recognized the way it should be. Now let's see the report of Niti Aayog. So the Niti Aayog presented a report in which it was mentioned like 70% of water is contaminated in India. In terms of the ranking, India is placed at 128th, 120 out of 122 countries in scope in terms of the water quality index. So this fact itself says it all. Now, if you see at the bottom also, almost 2 lakh people are dying every year because of inadequate supply of safe drinking water. So facts like these, facts and figures like these establish the fact that we are facing a severe water crisis and we need to address it. And thankfully, the government is taking some measures to do the same. But before we get into that, let's see in terms of water treatment sector, what is the estimated growth of this sector? So if we see the report of Grandview Research, the market is supposed to grow in India at a CAGR of 9.5%. So right now it stands around 3,000 US million dollars, and by 2030 we will be seeing it at around 5,000 million US dollars. So the market is bound to grow. It's based on the stats as well and based on the reality of the water crisis, the facts and the figures. So everything indicates that the water treatment sector is bound to grow moving forward. Now let's see what is the government doing in this. The Jal Jeevan Mission. They want to make sure that every household in India has a tap associated. So there is a lot of piping network and fueling from the government that is happening to ensure that every household has a tap in their house. Key highlight of the Jal Jeevan was in the recent budget, it was allocated sum of 67,000 crore to ensure that the whole process is expedited. So that's the Jal Jeevan Mission. Then they have a Amrut scheme, that is Atal Mission for Rejuvenation and Urban Transformation, which is the backbone for urban water treatment. So they are trying to provide funding to companies, they are trying to partner with different companies and sources to ensure that the urban infrastructure for water treatment is robust and future proof at the same time. So overall what we are seeing is government is very serious. Government thinks that this is a priority and they are trying to make sure that they cope up with this problem well. Now comes the companies. So government cannot do all this alone itself, but they need to partner, they need to give contracts, they need to give opportunities to the companies in the private sector to ensure that this happens. And that's where the 4 companies of interest comes into picture. The very first one is Envirotech Systems Limited, then we have Felix Industries, then we have Webag and the EMS Limited. So we've shortlisted these 4 companies because these are good in fundamentals and stand in different spectrum of risk and the time frame of investment. So we will do a detailed comparison of these 4 companies and then we will come to the verdict. Where does this company fit based on your risk appetite and the investment horizon that you have? So if you see the revenue, the Webag stands at 3,294 CR. Rest all are relatively less. So obviously revenue wise it's a big company and it takes precedence. And then since the revenue is high, the profit has to be high, so we see a good profit for that also. Now earnings per share, same goes. The higher the earnings, the number of shares are less, so the earnings per share becomes more. So all these three things are in favor of Wabag because of the intrinsic fact that it is a big company as compared to the other three. But that doesn't mean that it becomes your selection. It's just that it's a big company, that's why the numbers are high. But when you see the PE ratio, the P of EMS Limited is attractive as compared to the other three. So, in my opinion, right now, based on these sheets, I got interested was in the P of EMS because it's available at 16.7, whereas the rest is either 25 and above. So that's a little bit higher for this sector. So I would consider EMS as a very wise investment if I have to go the PE route. And PE is price to earning ratio. So it's more or less like it gives you a consideration of what is the valuation of the company. Is it overvalued, undervalued? So I would say that based on just purely PE, EMS is right now undervalued in my opinion. Then let's go to the other section where we see the ROE. So ROE, if you see, EMS has the almost the highest ROE among the four companies, and we have the lowest ROE, return on equity. So return on equity is the metric of how well the company is utilizing its equity capital. So the higher it is, the better. So EMS clearly wins this game. Then goes ROCE. It is the overall capital employed. It takes into account the debt also and the equity also. So here also EMS is a clear winner, and we see not so good numbers for Wabag, but since it's a big company, let's give benefit of doubt. But then comes the debt to equity ratio. So if you see here, this is pretty alarming for two companies, Wabag and Enviro Infra. So it's 0.18 and 0.24. That signifies that they are currently sitting on a decent debt. So I don't prefer companies with a huge debt, but this is not very high also, but not very low also. So if we compare these four companies from a debt standpoint, EMS Limited and Felix Industries make sense. Then in terms of order book is robust for all because as I mentioned, the government is interested to take care of this problem very actively. So most of the companies have received order from the government, central or the state. So overall, based on this, I am interested in EMS because of the debt-free nature and higher ROE and ROCE. Now, if you see here the growth prospects, so overall, if I see the 1 year return is something 73% we have got from EMS, 169%, 21%, minus 41%. So one thing I would say that if something is growing, it can continue to grow further, but there has to be a correction and stopping point also. Because Wabag is like a veteran of this industry. So when we say that people are taking the water treatment sector seriously, they have a tendency to invest in veterans like Wabag, and that's what is visible here also because it has given up growth of 169% in last 1 year. But what is the underlying thing that we need to see here is the Felix Industries and Enviro Infra. So they have given minus 41 and 21. They are small cap companies, so probably the interest or the participation from the retail and institution is not as expected. So what we can potentially see is if the sector is good and Wabag has had it run, now the money is bound to flow in the stocks like Enviro and Felix. So from that growth standpoint and the sector specific standpoint, I will be interested in Enviro and Felix as well. So overall, all these four companies look good. In my opinion, what is happening that EMS is good from the financial standpoint, the debt-free nature, the ratios. Wabag has its robustness, has like a proven track record, so it's good from that standpoint. It's bound to grow in the future also. Maybe not at the pace of the other companies that you're talking about, but it will is bound to grow. Now, if we talk about Enviro Infra, so that is something I'm interested in because it's not just in water treatment sector, it's in the renewable sector also. So if you invest in one company, you are getting exposure to technically two sectors, one the renewable, one the water treatment sector, and then the Felix Industries. So companies like these make true well, to be honest. We have created a cross grid of like time horizon and the risk appetite. So from the left to right, the time horizon will go from short to long, and from the bottom to up, it will go from risk appetite low to risk appetite high. So if you see, if you are looking for a short-term growth and your risk appetite is low, you should be going for Verbag, because there is no doubt that it will be growing at slow and steady pace. So you can get your money there, invest in 6 months or a year, you will be getting decent returns out there, and the risk involved is less because of the intrinsic nature of the business and the sheer scale of the company. Now, if your risk appetite is low, if you're looking for a long-term perspective, because it is available at a very good P and it is bound to grow, it is bound to come at a right valuation, EMS Limited becomes the right bet. Whereas if you are looking for short-term, but your risk appetite is high, Enviro Tech Systems Limited would be a good choice because of the fact that right now it's available at a good price point, and in the short run we might expect some good up move because this stock has not received the interest of or participation of the people it deserved. Now the risk appetite is high and the horizon is high, then you should get into the Felix Industries, because that might not give you returns in the short term, but it can definitely give you returns in the long term or long horizon. That's it for now, and like the video and share it with people who are interested in the growth story of India or are looking for companies that they can invest in for long term and can generate true wealth.